With them being down over 45% just this year alone, the biggest question almost every investor has with this stock is, will this thing keep dropping, or is now the time to load up more of this stock into your portfolio? Which could be one of the reasons why this lady now owns over 18 million shares of the company. What's going on, my fellow YouTubers? I hope everyone had a Merry Christmas, and now that the holidays are coming to an end, it is now to focus on growing your portfolio for the year 2022. In today's video, I'm going to cover a stock called DraftKings, and we're going to discuss a couple key factors that really, when you look at this company, we maybe understand why it dropped over 40% just this past year, their overall financials, the future of the stock, such as a new updated target price, and some really good news that may help the stock keep the momentum going from where it was to where it can be in the year 2022 and past that. Now, if you're new to the company called DraftKings, no worries. I'm gonna do a brief review or recap of really what the company provides investors and consumers. Now, if you're already familiar with the company, feel free to use the chapter tabs below and skip ahead to the sections that you want to watch. So what exactly is this company called DraftKings? Well, first of all, they are an online sports betting platform that allows sports fans to win money, and they have really three main sections that include fantasy sport, which has daily events, anything from fantasy football to basketball to racing, UFC, the list goes on and on. Then they have their sports books, which is a safe and secure betting platform. And then lastly, they have their casino, which has over 300 games which could be played 24/7. And just recently, they launched their marketplace where you can buy those up-and-coming NFTs and sports collectibles. So let's focus on the actual stock price of DraftKings. Right now, DraftKings is trading around $27 a share with, again, that 45% decrease in a one-year period. When you look at this decrease, I don't care what stock it is or what industry it is, this is not a dip. When people talk about dips and drops, this is one of the pure definitions of a drop in a stock price. Now, before we look at the financials, let's kind of examine why their stock may have experienced such this significant drop in price. The first thing is IPO. When a company does an IPO, retail investors are notorious for pushing the stock, sending the volume up, and sending that stock price up to prices where it really is unreasonable or it isn't a reasonable market value. So when you look at a stock in general terms from the IPO, if a stock drops or even dips, it may actually be coming down to a more market value or a reasonable value for that company because the surge or the hype or the fear, the FOMO may be disappearing with that company. The second thing could be a factor in this is acquisitions. Back in August, they announced they were acquiring Golden Nugget Online Gaming for over $1.56 billion. Then, back in September, they offered to buy UK-based Entain, I hope I'm pronouncing that correctly, for over $20 billion. However, that deal did fall through. When you're talking about acquisitions, some investors simply do not like companies that grow too big too fast. With that comes several issues. One, they may not be able to sustain the growth of the market, or the consumer base may not be able to keep up with that growth. The second thing, which we see with companies like AT&T, is they acquire all these other companies, but the issue is they take on too much debt. So while they're posting great revenue numbers, the debt simply does not match up, and it turns a lot of investors off, which you start getting these analysts posting or people doing shorts against the stock, which in essence could help drive that stock price down, which could be what we're seeing with DraftKings. For example, on the Motley Fool, they post that short seller Jim Chanos is betting against DraftKings, which in essence drove the stock price down. He come out and said that he's like, hey, I think it's going to drop to around $28 a share. And that's how he makes money, because when people short stocks, they're saying, hey, I bet you this stock is going to go down. When in fact the stock price does go down, that's how they're able to make their money. But a key thing to keep in mind, this just isn't DraftKings. When you look at one of their major competitors, which is Penn National Gaming, when you look at their stock price and their 1 year growth or decrease, they are almost identical, and they are down over 40% as well. So enough of the doom and gloom, and let's focus on some good things, which is the financial and the positive news that DraftKings can really offer to us as investors. The first piece of positive news is Cathie Wood. She made headlines, it seems like almost every week in the financial industry back in 2021 because of the growth that her company ARK had made with investing in a lot of new and upcoming companies. Cathie Wood and two of her famous ARK ETFs have DraftKings in them currently. And in December, she added over 55,000 more shares, which brings the total number of shares that ARK owns to over 18 million, or that equates to over $12 billion worth. Even Michael Jordan has jumped in with them this summer in an advisory role that has some type of equity into the company. And if the GOAT knows one thing, that is for sure winning. So then they posted their third quarter earnings report. And when you look at it, it may shed some light or give us some insight to why people like Cathie Wood believes in this company. Just in their third quarter, they brought in over $214 million in total revenue, which was a 60% increase for the year over year. Additionally, they added 3 more states to their online sports betting, which still only applies to 29% of the US population. The revenue growth has so much room for potential to grow and make investors a lot of money because the market is still virtually untapped. There are still just 11 states that either don't allow online sports betting or it's in some type of pending legal status, which includes heavy populated states like Florida, California, and Texas, which their total residents is over 89 million. They also launched their DraftKings Marketplace, which is a digital eco-collectible site that includes the inaugural set of icons like Tom Brady, Simone Biles, Derek Jeter, Tiger Woods, and yes, Rob Gronkowski, or the Gronk. With that marketplace, they have already grossed over 20 million in total merchandise sales. The truth is, this stock has such a high ceiling for growth, but as with any other company, there are risks associated with that. One of those risks simply being COVID-19. Just this past week, the ESPN announced that the NHL suspended all NHL games for several days due to uprising in COVID cases. So if teams are not playing sports, then people are not betting on those games, which means there is no revenue coming into this company. The second risk with this that we see, just the obvious risk, is there's those 11 states that's either pending or currently do not allow online sports betting. So if you take one or two of those major states like Texas, California, or Florida, and they come out and their legislator says, hey, simply we are not going to allow this, that could drastically impact the growth that this company could experience in the next coming years. But when you Google DraftKings and you start doing research on this stock, a lot of analysts have an overall very bullish look for them. TipRanks has a median target price of $51 a share for the company in the near future. And in an article by MarketWatch, Mike Hickey had placed his target price at $57 a share, which would be a 59% upside from the current price. Although no doubt 2021 was a rough year for DraftKings, but when we look at the future, we see 100% there is potential and there is potential for growth and great things for this company, but does it manufacture into success? So when we look at 2022, is this a company that's going to jump 30 to 40% over in a couple of weeks? Or is this a long-term play where it's 1 to 3 years where they're figuring out these new states coming to the mix where they can grow their revenue and grow their overall customer base? My personal strategy is a long-term play on this. I don't believe this is a stock where if you put a couple $1,000s or just buy a couple shares in simply 1 to 2 weeks, you don't get a 30 to 40% return off your investment. So I look at it as I don't put my money into this company. I understand the future. I see that it has potential. So I'm willing to let my money sit in there and make me more money in the next 1 to 5 years. Once it hits that $57, $60, $80 a share, I may take my initial investment out and just play with house money. Let me know in the comment section what you think about the potential for DraftKings. I hope you have a happy new year. I hope you stay safe, and we'll see you on the next video. Later.